Hey fellow traders. Today in this video I want to show you one of the quickest ways to become profitable. And this is something I've been working on and working with and doing for quite some time now. I've been doing a lot of looking here and there to figure out what's working, what's not, and kind of really simplify things down to what's really doing the actual work. If it's your first time visiting the channel, welcome. To all those who have been subscribed and coming back, welcome back. And let's go ahead and get started with exactly what we're going to be doing today in this video. Basically, I'm going to lay everything out in a 1, 2, 3 style fashion. Everything is broken down into simple steps to show you what you need to do exactly in order to figure out how to take the way that you're trading and actually turn that into something that is potentially profitable. It doesn't require you to learn a whole new set of strategies or ways or anything like that. This is basically just the hybrid hedging, and I'm going to go a little bit deeper in detail about each little part of it and show you how you can get some results like this. Right now, this is my current 5K challenge results, where I was sitting at the end of last week, and I'll show you as we go along exactly how I accomplished all that. Now, before you do anything, you always want to make sure that you're thinking about risk first. It's always a risk first mentality. It's never about profits. It's always about risk, because if you can't open another trade, if you can't have a large enough stop size with your account, then you just cannot trade. So if you can't trade, there's no way you're going to make profit. So always make sure you keep risk first in your mind. Now, the very first thing you want to do is know your numbers. Now, I know there's a lot of numbers in trading, but there are only a few that are actually very particular and are going to help you out the most when it comes to actually becoming profitable. So basically what you're going to do is you're going to take one pair, preferably one time frame. Sometimes with various strategies, like the way I trade, I know I may use two, but you want to select one primary time frame that you're going to be trading with and using. It's probably going to be one you're most familiar with. I know my favorite time frame is the hourly, and you're also going to use a single strategy. And basically what you're going to do is you're going to take and backtest your pair on your time frame and your strategy, and you want to try to run at least 400 to 500 simulated trades. You want to try to do as many as possible, because the more numbers that you have, the more tests that you have, the more accurate of a number you will come out with. If you're only doing like 20 or 30 tests and you might have a high hit rate, it may only work in that certain area of the market or those certain market conditions. And then you go and move to a real account or go to try to trade it live, and it just doesn't work because those conditions are different now. It's a new time, new candles. Time has moved forward, so you're working with different data. So by doing 500, 600, 1,000 simulated trades, you're going to have a more accurate representation of how well your strategy does overall. The main number you want to focus on is that number of losses consecutive. So you basically want to know what your highest losing streak is. And if you've only done 20 or 30 simulated trades, you may not have an accurate number for this, and it could get you in trouble in a little bit. So one of the best ways to approach this, if you haven't really put in a lot of practice or you haven't done a lot of back testing, I would highly recommend spending about an hour or two every day. You should be able to get off between about 20 to 30 trades per hour. So if you do just a couple of hours each day, after about a week or so, you can build up enough practice data and enough information to be able to know exactly how well you're going to perform. This is also going to help you as a very long-term benefit, because then you're going to know, okay, I've done loss 6 times. My typical loss, the worst I ever saw was like 10 in a row. So it's still no big deal. We're still carrying on. We can, it's nothing to worry about. That's mainly where you want to get with trusting your strategy and trusting your trading, because the trust in yourself is going to help a lot with your psychology. It's going to definitely help you out when you start to have a winning trade. You will be less tempted to close it early because now you're more confident that it's going to hit your typical target. Your strategy is going to produce a certain amount of wins. It's going to work a certain way. It's going to cause your account to react certain ways. So all these things you want to make sure that you're really familiar with, so that way when price is moving with your real dollar on the line, it doesn't shake you mentally. That's going to help you out probably the most, is getting that time in and trusting that strategy. So that's about the only place I've ever found that trust will actually come from, is just simply doing it. It's also going to help you a lot in the long term with getting experience with your pair and your time frame. It'll get you more in the mindset of your average trade duration, how long you may be hanging on to a trade. You're going to get your typical stop loss sizes, your typical target sizes, and then you're going to take just these three pieces of information: your average stop, your average target, and your average basically your largest losing streak. And then we're going to take that and we're going to place that into the calculator here in a bit for the drawdown limits. So that's all for step one. This is a lot of work. It takes the longest amount of time and effort, but the effort put into this step is definitely going to be worth it on the next part, because the next step is to just simply trade. You're going to do it the same way you tested. You're going to use the calculator that we're going to go over. I've made a couple of updates to that, but we're going to go over that in the next part of the video. And basically, that calculator, what we work out with our drawdown limits in the next part that I'm going to show you, that's going to be basically your trading plan. You're going to run your strategy on your pair, your time frame. If you run multiple pairs, then make sure you're checking with multiple pairs as you're testing. But basically, everything you did in this step, you're going to do exactly the same way here, except now we're going to have that plan that we're going to base out of our drawdown limits. And all we need are those few numbers to make this plan. So everything stays fairly simple. And as long as you're following your plan, you're staying disciplined, you're making the trades, you're doing the same thing as your strategy. You're not trying to change things up. You're not trying to get greedy or change how you were practicing it. And as long as you follow this plan and stay consistent and disciplined, then you have step three, which will be just simply cash out, or you can leave the money in and continue to grow the account. Now, like I say, I've been consistently doing this now for about 6 months, and even though I can have between a 20 and 30% hit rate, because of the way I worked it out and because I'm sticking to my plan, I'm still making a consistent and steady gain each week, sometimes each week, but definitely each month. For the last 6 months, I have not had a negative month, and I've been doing exactly what we're about to get into. So I'm going to go ahead and pull up the calculator next. We're going to take a look at all the numbers. I'll use my example testing to kind of give you an idea of what kind of numbers I'm looking at. And I'm going to actually use my challenge account, the 5K challenge account. And I'll basically show you how I approached that from the beginning and how I set that up. And then in the last part of the video, I'm going to get down to actually showing you some trades and show you exactly how this is going to look in application. So we're going to go through each step. I'm going to walk you through the calculator, show you how to use the new updated version. And then I'm going to actually show you how I would trade in some backtesting software. And because I'm doing everything the same in the backtesting and in live market, this is going to basically give you an idea of what I'm typically seeing day to day, because I do this every day. I'm a daily trader. A lot of times I will open at the beginning of the day and I will close at the end of the day. And if things look like they're going to continue, I may swing trade. But I'll get into that later in the video. But first, let's go ahead and take a look at the calculator part. All right. Now I've got a blank one set up. I've already went ahead and taken care of the settings part. This is found from the broker that I'm using For the challenge account, they use a US dollar account currency with a 500 leverage, and they're charging me $4 commission round trip, and it's charged on the open of the trade. So right now, currently, I'm at 51.61.92 and some change, but I'm just going to show you from the very beginning. So if you were to open up your own challenge, this might be one way you can consider approaching it. Now, I do know from my backtesting, my strategy, my practice, my experience, I know that in most cases, I'm often wrong about between 5 to 7 times before I can finally break a losing streak. So I'm going to try to use this calculator, and I'm going to try to set this chart up as the very first step before I start placing trades. I'm going to know exactly ahead of time what I'm looking at for each loss, and I'm going to know what my total drawdown is going to be, because that's going to be the deciding factor in how much risk I can put forward. Now, for the current challenge, it has a 5% daily loss rate, and it has a 10% failure drawdown. So these are the important numbers for the challenge that I'm paying attention to, mainly just this 5% maximum daily loss. I'm going to try to set this up to where the drawdown works with this number and not that number. And the reason I'm doing that is because, of course, I want as many opportunities to get a winning trade and advance the account forward as possible. So if I'm using a typical higher risk percentage, like 0.5%, 0.75%, 1%, or higher, I don't get very many opportunities to be wrong. So the way I wound up approaching this challenge is I began with just a simple 0.25% risk. Right now, I've kind of moved up a little bit. I'm actually using a little over a 1/3% risk, but I would recommend, especially if you're looking at 7 to 10 losses in a row, a good number to start with is about a 0.25% risk. You could also apply this to your personal account, but me personally, I have a little bit higher tolerance for the drawdown, so I'm going to use a little bit higher amount for my personal account. I also, like I say, believe in the strategy. I know what kind of trades I can make, what kind of outcomes I can expect in the losing streaks, so on and so forth. So I'll advance that risk a little bit to start because I'll account for that higher drawdown. But I'll still set everything up exactly the same way as I'm about to show. So let's say, for example, you wanted to be a very cautious challenge trader and you were going for this challenge account. So I would go ahead and start with a 0.25% of the full account amount to risk. So that leaves us with $12.50. So I'll take that $12.50, put it into the risk amount, and then I know in my experience when I'm trading the Euro USD, I'm typically going to see a stop between 26 to about 34 pips. I'm going to just use a standard 30 pip stop. And it's saying that the best size for me to use will be a 0.04. The total risk is going to be $12.16, and that's also including that 16 cents commission that I'm being charged. So then I'll take that and I will put it into this chart here. I'll go ahead and carry over the stop. And I know typically I'm going to see between about a 90 to 100 pip target when doing it the way I trade off the hourly chart. So I'm going to just use 100 for a round number to make everything easy. And because I'm just kind of looking ahead at a rough estimate, I'm going to carry all these down. But now for the next part, what I'm going to do is I'm going to start paying attention to this drawdown amount. So what I'm going to do is first I'm going to put the account balance in. So if you're seeing any errors, just check this square here and make sure all your settings are all set up. I tried to include a little bit to let you know what you may need to do. But make sure that account starting balance is set, and then you'll just put in basically your first risk size that we got out of the best trade size calculator in the risk calculation. So that's what we're looking at for our very first trade. So we're going to risk $12.16. If we lose the trade, We're going to be looking at a new equity of 4,987.84. That's accounting commissions. And we will be looking at a total drawdown of just under 1/4%. So because we're working with lots, it's a little bit of a small size. We may not be able to maximize that risk all the way out. But if we were to increase that just a little bit, we may get up to a 0.05, but I'm going to stick to the 0.04 right now to stick to our current risk curve and our risk model that we're looking at. So because it's our first trade, we're not going to be behind any, so we don't have any recovery to make. And if we were to catch this trade clean, we would gain a total of 39.84. True gain would be 39.84 as well, because there's no previously lost trades before it to account for. So we'd be looking at about a 0.8% gain at a 1.3 at a 1 to 3.27 R ratio. So let's say we get that one wrong. A lot of times when I'm advising how to approach this type of setup and basically approach this method of risk recovery, I do actually advise sizing up, but I don't advise going the full definition of a martingale and doubling your size on every attempt. You really don't want to do that after a certain point because that risk will get extremely high. So what I kind of advise doing is either taking the start size, or if you're starting a little bit larger like I am, you may want to take a little bit smaller amount. But basically, on your second trade, the whole objective of what you're trying to do is to actually try to recover this 8-7 or this 12-16 that you lost if should you lose this trade, plus also still make a little bit to move the account forward. So oftentimes it may work out, especially with some of the smaller numbers. If you were to go ahead and use the same size that you started with, give it a second try. So that again is going to take another $12.16 in risk. But then if you lose this one, you're looking at $4,975.68 as the account balance, and that'll bring your drawdown to just under a 0.5%. Now, this column here basically tells you at this size how far you would need to go to reach $5,000. That's basically your break-even point. So if I were to open this trade at this size and get a movement of 61.2 pips, that also accounts for the commissions, then the account balance should be $5,000 again. But if we were to carry this trade on through to the target, then the target for this trade is going to be the same as the last because it's the same size, same numbers. But our actual true gain is actually going to be $27.68. This is going to be the true gain above that $5,000 starting balance because that will take into account the fact that we lost the last trade. So it's going to take that $12.16 out of that gain and give you a true account gain of just over a little over 0.5%. Now on the challenge I'm doing, they count 0.5%, 0.5% as a minimum profit to count as a profitable day. Now, I've already hit all three of mine on this one, so basically at this point, I'm just trying to reach the target, and then I'll be on to phase 2, and I'll have to work with that issue again. But for now, I don't really have to be concerned with that right yet. But that it would be more of a conservative approach. But then what you'll notice, let's say, for example, you didn't win that trade either, so you got these first two wrong. So now when you go to do the next size, if you were to use that 0.04 again, well, now we're looking at about similar drawdown. We're going to add another 0.25% drawdown, but now at this point, we're not making too much. Now this is still a gain. It could still work. It could still be quite a conservative way of going about doing it, but now notice that we're starting to get further and further away from our account starting balance. So one thing you want to make note of is if you do wait until the 4th, 5th, or 6th trade to try to size up, it's usually going to be to your disadvantage and slow you down in the long run. So in this example here, one way I had kind of looked at it to start with is I was using 0.02 larger than the size before it when I was first starting out. And notice how the numbers will now change to get a little bit better for us. And we can still consistently make around between 0.8 to 1% just by winning one trade. So even though I lost these other two trades, because of the size of this one, it increases the pip value. And yes, it does increase the risk. But because we know our limits, we're not even 1/5 of the way to the 5% that we were working with. And then on top of that, instead of having to go 92 pips, we only have to go about 69 pips to reach back to that break-even distance. So that's going to equate to a larger amount of gain and still give us a higher reward ratio, plus wipe out these losses again. And you can keep going like this. For example, like I say, I know I'm being familiar with myself. I know I'm up to about 7 or so losses in a row. So what I've done is I've kind of taken this whole chart. I went ahead and filled everything in. And then I started to look at this number here and try to adjust everything based on this number here. And you'll notice the further away, this is another reason why I kind of size up immediately, is by the time you get to trade 7 and 8, we're now looking at still losing. Now, I know I've had a couple of questions in regards to what do you normally do when this happens. Well, if I have enough in the drawdown percentage, what I may wind up doing is just adjusting the sizes a little bit to try to bring this back up above 0. If I don't really have that option, I will oftentimes size down. So, for example, if I was working with a smaller account or a lower limit, I might work with something like this. And that makes the numbers a little bit worse towards the tail end. But once you've lost several times in a row, let's like instead of saying 1 through 8 here, let's say this number 1 started at like a 7. So 8, 9, 10, 11, 12. Let's say this was your 12th trade. And now you're looking at, okay, even if I win this trade, I haven't won anything. But what you can actually do at that point is you can try to recover the small amount of loss. So like you may want to recover these 3 lost, and then when you take that trade again, you'll enter at this size to try to make up for the rest. So that's one of the ways you can really slow down the losing. If you're experiencing a really long dry spell of losing streaks, such as 2 to 3 months of things just not going well, it's not working well with your strategy, so on and so forth. This could really help you plan ahead of time to really keep control of your drawdown and really keep from running things down in your account. So that's going to be the first step to set up, and this is basically going to be our plan. So once we make up and go through the calculator to get all the numbers set up the way we want to set them up, then we go in and we start trading. So then we'll open our first trade at a 0.04, and if this is what we determine to go with, so if it, then by the time we get to the 4th trade, we already automatically know it's going to be a 0.1. If we lose 2 more trades, then we're going to be at a 0.12. We already know that we're sizing down by the 7th loss. So everything is already pre-planned out, and we haven't even looked at the chart yet. We're just taking our experience, what we most typically see. We're filling in the chart with that, and we're getting all of the breakdown of everything of what our account should look like and the different outcomes, losses, how far the break even is away, the drawdown percentage, the drawdown amount, what our account balance minimum is going to be. So for example, in the challenge I'm doing, I do believe that would be pretty close to that would be pretty close to getting you to your loss limit, but that's also if you were to lose a single trade. But if you have not had a profitable day, this could be an issue that way. But I mean, like I said, you've got a lot of trades to make before you even reach that point. So that's the whole purpose of trying to calculate all this out on the drawdown chart ahead of time. And now if you wanted to, I'll go ahead and show you this just while we have it up. Same thing there, but this one only has these 3 instances here. So if you're starting out with your lot size, you put in your typicals, and it will automatically make the chart based on that starting pattern. So it'll basically just reuse your first opening size to add to each one. So if we were to change this to a 0.03, it would change to reflect that. Each one would move up by 0.03 at each level. And this is the main reason I love to size up, is because for so long and so frequently, that break even for the account stays within the target that you're intending to hit. So even though you may have lost 4 trades in a row, if you hit that 5th one, you're still, or even if you miss and hit the 6th one, you still end up coming out ahead all the way out to trade number 7, and then you finally start to slip at 8. So that's one of the things you're trying to accomplish, is just anything that you lose, your target and size of the next level will make up for that difference lost and still attempt to make some sort of gain. So that's the whole approach to trying to plan out each one ahead of time. And then as you're trading along, of course, the world is not perfect. You may end up closing out at 27 or 26 pips on one. You may want to use a bigger stop on another trade, so on and so forth. Your target may not be the same. So it's going to vary a little bit. So then you would just come down into this area and, of course, put in your account start. And then this will be your current equity. So if you haven't opened any trades yet, then, of course, your account will be even. But let's say you have already lost the 3rd trade, so now you should be at 49, 45, 28. So if we put that in to show example, now you'll get a new updated drawdown amount, and all of these information panels here will work in relation to this balance here. So if we're looking at, we have lost trade 3, we're now going to open trade 4. So now our next trade size in the chart is going to be that 0.1. But let's say, for example, we wanted to use like a 34 pip stop this time. And we're looking at like 120 for our target, just because that's what the market is showing up and setting up for us. So now what we're going to be looking at, we're going to be risking 34.40, which is a little over 0.5%. But now we're also looking at a target gain of 119.60. So right now our total drawdown is 54.72, a little over 1% down. Our trade ratio for this setup here is a 1.348 to 1, and it would take a minimum success rate of 22% in order to keep the account from going over, basically the rate of ruin. Now, based on our drawdown, and should we hit this target, this is our actual result of what we're looking at for the overall account. So should we win this trade, we will get our account back to 5,000, plus we will make 64.88 on top of that, which will result in $5,064.88 being the new account balance. So that's what these numbers are going to work out here. This is going to show your risk amount, your target amount, the margin required for opening that position, and this will show the new equity should you fail this trade and get it wrong. And then it also includes that distance to break even. So using this size and 55.1 pips, we will be back to break even. So that's the layout of the calculator and the updates. I had to change the commission around because it was in the wrong spot. It wasn't a parenthesis or a sign issue. It was just calculated in the wrong area. So that has all been adjusted. Everything's been double checked to be correct. So everything should be fairly reliable and accurate within a few cents. Now, of course, with rounding, I could miss it by a penny or so, but everything is fairly close to accurate. And while I've got it up, I've already got what I've worked out. So right now, this is basically the current drawdown chart that I'm working with the position. Now, I haven't had any losses, so right now I'm just working with that 0.06 and waiting to see what's going to happen with that trade. I'm using 29.8 for the stop, 89.1 on the target. So this is what I'm looking at for my next trade. So everything's looking pretty good on this challenge. I'm just about to be at the 3-week mark, and we've already raised the balance up 3.28% so far at this point, and just waiting on this trade. Right now it's sitting just a couple of pips in loss, so we're unmoved at this point basically, but the outcome will happen soon enough. So now that we've got this already worked out, though, I'm going to take this and load up the testing software, and then we're going to apply this chart, this trading plan, which I may actually just go with the standard ideas that we already had and just use the 0.2 of increase on each consecutive one. And then we'll use this outlook here as our trading plan, and I'll show you what that's going to look like actually in practice and in application. So let me get that pulled up, and I will see you on the chart. All right, chart is loaded. I've already got everything set up. I went ahead and changed the blue candles to yellow to help with seeing them a little bit easier, and gonna keep the dark background to try to make everything easy on the eyes. If there's any other possible suggestions as far as the chart setup and all, just let me know below. I want to make sure you guys can see what I'm trying to show you. It doesn't really make a whole lot of difference to me. I do a lot of trading off my phone as well, so I mean, a chart's a chart, so I'm good to go either way. I just want to make sure you guys are well off enough to see it and can do well with it. Add that back into there, make a little adjustment. And what I'm going to start with, I've already got the Euro USD loaded, and I'm on the hourly chart right now. A lot of times I would like to watch the 15-minute chart, but more often than not, I'm usually trading off that 1-hour chart as my anchor chart, my primary chart. So I'm going to use that one to start with the testing, and I'm going to show you basically a way I would practice as well as the way I would trade, and we'll apply the calculator in our trading plan to keep things moving along the way that we want. So let me go ahead and put this up here. And the very first thing I'm going to do when I'm opening up a chart looking for a trade, I'm basically going to start with just marking out the basic zebra lines, the basic support and resistance levels. And basically what I'm looking for in regards to support and resistance, I'm just looking for where we had something show as support, then something show as resistance. And I'm going to be looking again for like a strong rejection here. Let me see how far apart that is. 93. So that's one of the things I talk about in my other videos too. You'll notice that a lot of times when you're doing support and resistance levels, they're going to line up somewhere around a pattern. So if you don't have any levels at that area, like say for example this was an all-time high, I know the typical pattern right now, this can change over time, but so far in the time frame that I've looked at and over the period of time that I've been trading the Euro USD, it's been about between 90 to 100, 110. Usually about 90 is a pretty safe measure for it. Now you may notice you may have these little levels in between, but they're fairly close together, so I'm only going to be looking for the ones that line up consistently on that pattern. Any of these little in-between levels, like here and there, like they're really close together, I'll kind of ignore those. And then basically what I'm going to do is just wait for price to get to one of these levels, and I will take a trade at that point. I may even just randomly jump in. It really a lot of times I'm looking in price in a range. I'm not really looking for those sniper entries because the likelihood of getting one is not very high. And I'd rather just get in the market, make the trade, because you miss 100% of the shots you don't take. So I'm not really looking for any special setups, anything particular. I'm just looking for these levels, and then sometimes if I'm not even sure, just flip a coin. I mean, just, you got to be in the market to make, you got a risk to make, and we already know that our strategy can account for several losses. So oftentimes I'll find myself in a situation where I'm looking at the market and, okay, I think it's going to go down. This is about 5 o'clock in the afternoon my time, and a lot of times when I'm often looking at the market, about 6 o'clock or so. But in this case, it looks like we're going to have some type of pullback into this level, so I'm going to wait to take a trade off of this level here. And I'm going to look to use that standard, just arbitrary 30 pip. We're going to look for about a 90 or so pip target, and we're going to use our trade size that we accounted for in our trading plan. So for that, we had the 0.04. So let me get back to the tester, and that's the size we're going to use. We're 30 pip stop, about a 90 or so pip target. Just going to place the order and see if we get that. Taking a little bit longer. There we go. Got the order. And then I'm just going to wait until we either hit the target or we hit the stop. There we go. So we won the first trade. No worries there. Pretty simple. Took a couple of days. We did incur a few cost of the swap a little bit, but all in all, made the gain there on 0.74%. So almost 3/4% off of that small trade. So again, we'll do the same thing. I'll probably look and wait, and let's say, for example, I'm getting a little antsy there, so I'll just go ahead and buy, and we'll stick with that same size. Stick with our trading plan. I'll take about the arbitrary stop loss, and we'll try to see if it's going to trade back up to here. We'll go for a little bit bigger target, and it may even reject and lose. Just kind of what I'm hoping for, so I can work into this calculator part. No idea what's coming. I don't even really pay much attention or try to memorize things. So, okay, there we go. We lost. So now we have the one loss. We did make that one gain of 37.10. So let's go ahead and update our calculator now for our new situation. 5,037.10 was our high balance, and our current balance is 5,023.88. So 5,023.88. Okay, so right now we're looking at that small amount of drawdown, and our next trade was a 0.06, and we use about a 30 pip stop for that, and I'll probably look for somewhere around that 100 pip target. So now what we're going to do is, if we should win this trade, it will wipe out this drawdown, and it will actually give us just under a 1% gain for that, because we're looking at just a little over 1% for the target gain if we were to use that 100 pip target. And I am going to see, I think we're probably near a level pretty close to it. So let me drop that line on there. Pretty close, and I will actually roll the price forward. There we go. It did get that. There we go, and I'll take just a market order buy right there. Set it up close enough for government work there. Take profit. Yeah, so we'll get pretty close to that 100. We try to go back to those tops. And run things forward a little bit. I may have to hold that. Taking a few in the swaps, and we lost that one. So now we've gone down just a little bit more. 511.27. So we'll update that and continue on. We were going with a 0.08 for that next one. So now, again, if we're going to lose, we're going to lose a little bit more equity. We'll be about 1% down off of where we started. But if we win, we're still looking at around that 1% gain. So that's all I'm trying to hit, is that little 1% gain on each one. So now I will probably go for a sell here, close enough. Try for about 100 pip target. Oh, I didn't even use the right size. That was probably part of the issue, so let's go ahead and up that. That's actually going to help out in the long run, so sometimes mistakes can help, sometimes they can hurt. This may actually end up continuing on now, so how about that? So, and now you notice our equity, we had reached, now we wound up getting stopped out, but we did have at one point passed our gain. So right now I'm just looking at the 4988.43. It's kind of good that we're losing a bunch here. Let's see, what was that? 4988.43. Okay. And now we're up to the 0.1. So let's go with that 0.1. Use about our similar stop and target, and still looking at holding around a 1% gain should we win this one. So I'm going to give it a try for a long. I'll see if price will come back a little bit. There we go, and I'll just buy right there. Let's do this. This will make it easy. And there we go. Put that in there and buy. So now we'll see if we win this trade. No, we did not. So let's see if I'm going to... Oh, there goes the reaction. So we're at 49.6386. And we're still hardly down at all. We're just under 1.5% down. I'll bump this up to the 0.12. Similar, around similar gains and losses. But now we're starting to slip a little bit below under the 1%, but we're still looking at making a gain. And we are on our 5th attempt here, so we've already lost 4 in a row, and we're still hardly down at all. So no real issues, no real problems. We just keep trying, and eventually, let's see. I still do think it's going to reverse here. So let me go ahead and do a market buy. We'll try that trade again. And of course we lose out again. So now still think it's going to go up. We're just not getting the right entry. So we'll adjust our numbers once more. 49.39.30. Okay, and we'll bump this up now to a 14. Similar stop and target. Now we're looking at just a little over 0.75% gain, and that's also on top of that original 0.75% gain that we already made to begin with. That's still accounted for, so that's still there. So let's go ahead, and I'm going to go ahead and try one more buy here. And it would help if I would actually change the size. So I need that 0.14. It's one thing I get I slip a little bit on in testing. I get a little bit lazy about it sometimes. And of course we got the wrong entry again. 489674. 74. And we'll have to bump this up. I'll move this up to a 0.18. But see, we're still, even after hitting 6 wrong, 7 wrong, to go back and look, but we've lost several in a row already at this point. And still hardly down at all. It didn't help that I didn't change the sizes a little bit. But we still, nonetheless, did not win. And it worked out in favor of the risk. So I might try to sell that. We were at the 0.18. See if we can finally catch a good one. Nope, consolidated out again. So 48, 4207. It's very hard to get frustrated when that drawdown is going down very slowly. So let's see what we'll need to do on this. I can work it out. We're starting to get a little bit ahead of our plan, but that's okay. I'm just going to work with the calculator for these outputs here, and let's see if we can just get it back flat by simply winning one. I'm going to try to short off of this level here and come back to the next one, and we're going to be using a 0.2, so that's what I'm thinking here. Let's see if it'll go. Yeah, I should have shorted that. There we go. Liquidity run. Using the 0.2. 30 and 100s. See if we can finally catch one. Oftentimes I'm getting to where I'm not moving my stop too frequently. But in that case it probably would have been beneficial. 47, 81, 32. 32. And now we're finally at the 5% drawdown, but our risk is still a very small amount. So we're only halfway down to that limit, and we still have plenty of risk to work with by the limits of the challenge. But now at this point, because we're starting to get pretty high, I'm going to try to gain back some of that. So I'll still be down a little bit, but if we finally win this one, then we'll put our account in a little bit better position. So this is one of the ways that we'll deal with that very long losing streak, because currently we have quite a lot of those. We've only had that one win and several losses up to this point. So not doing very well at this point in time, but I'm going to give it one more go. We'll stay the same size, and we're just going to try to make back some of that we've already lost. So let's see if we're, nope, didn't get that one either. Now that's definitely looking like it's going to go up. And that's why I like the levels, because they always do tend to hit and work out. So now at this point, I'm going to try to stick to those. See if we can catch this one. And I think I'm going to extend that target on this one to go to the next level, because it's a very strong move. And starting to show a little bit of a failure there, so I'm just going to close that one out and see where we are. So we brought the account right back, but we're not all the way back to where we were in the beginning, but now we can move up our chart a little bit. So now we're looking at 49.6432. So we're at about 1.5% drawdown. So we'll go up here and look on the chart. That puts us about at a 0.1. So I'm going to cut this in half. I'll go to that 0.1 and we'll start back over from there. So now if we go ahead and win this trade, now we're looking at finally being back ahead a little bit further than we were before by that 0.5%. So I'm going to go ahead and put that trade on and see what we can work out. So let's see, I think that might be a top there. Do this as a quick sell. Nope, would have been better off to hold. Wait for the next level. There we go. Does look like it's about to head down and try to reach. So let's try to see if we can reach it down to about there. And I think we are 49.33.92. Let's go check our chart. Okay, and we'll need to raise that size just a little bit to try to make us some type of gain. I think I'm going to try for the 0.14. I'll go just a little bit more aggressive. Try to make us that little bit more of a gain. So we're looking at the 0.14. See if it'll carry it on down. Nope, not looking good on that one. But no, we might get something. Let's see what happens. There it goes. It did reach the stop. 489139. Okay. So for the next trade, I think I'm going to bump it to 0.16. We'll try for a little bit smaller gain, but some type of gain. Try to be a little bit more conservative because the trading is not going very well at the moment for us. So we feel like we're still in that rough patch. And let's see if I can hit. I'm going to adjust that a little bit. I'm going to see if we can reach down to here one more time. There we go. And equity's coming back. There we go. So now we actually have quite a significant gain, and we could actually close that right there if we wanted to, or try to see if we can hit the target. Let's just go for the target and see if we catch that, or if we get stopped again. And I think I'll just go ahead and close it right there because I'm not 100% sure if it's going to come out. But with only a few wins, we have already returned 1.5%. And our worst drawdown was about 5.5%. So we're using a very small amount. And we just have an absolutely atrocious hit rate. But these two winners wiped out all of the losers. And then we had one little matching trade close in there. So we had three little winners. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 losers. So we have brains burning out a little bit. Sorry. 11 plus 3, so we got 14. So if we got 11 out of 14, we are losing 78% of the time. But because of the way the structure is with gradually increasing that size, raising it up to work that risk, it's always going to come right back. So there's no need to worry with even an absolutely ugly hit rate like we had, which was 22%. 21.4%. That is a fairly low hit rate, but we still made a gain of 1.6%. And over time, this will gradually build the account up, and as the account grows, you just simply adjust these numbers. So we'll put our new balance in there, and we will restart. And after you've gained a little bit, 5,080.6. After you've gained a little bit, you may want to consider starting a little bit larger. So that will start to move you ahead a little bit faster. Of course, as the account grows, and if you don't grow your sizes to start with, your overall gain will get a little bit smaller, but of course your drawdown as well. But just by simply using the calculator, looking at the output to try to make some type of gain, and just being careful with your management, like especially when you get low, such as in that example there, when you're down to about 5% or so, 6% drawdown, you're starting to get close to getting uncomfortable with the challenge rules or something along those lines. Then you may want to consider reducing the risk just to try to recover some of the losses and then come back to recover the rest of the losses on another round. And even should you only get that one and start losing again, at least that will get you some forward progress to get you out of that hot water to give you more opportunity to try to make that gain. So just keep in mind, sometimes things may not always work out. You may have a few more losing streaks. Losses in a losing streak than you're used to, and that's why you really want to take as many practice and simulated trades as possible, because the more trades you have, the more accurate your understanding of your personal style is going to be. But that we just went over here with the levels, using the pattern of support and resistance. Sometimes I'll just simply look at the market. Like right here, I made that little call, so I was kind of thinking it may come down and start to come back into this little area here where we had the big push up. Some people would call that a supply zone. We could also see it come back down a little bit further. I can't remember exactly what happened earlier this year, but this is May to April from earlier this year. I know, a few other things about my trading statistics. I know most of the time I may end up holding a trade for up to 16 hours. Like, say, for example, if I took that and actually cleared it there, we would have been looking at, that probably would have been about a day and a half of holds, so about 33, 34 hours. But my typical trade is about 16 and a half hours. So a lot of times I'll have a trade here and I'll end up closing it here, and then I'll make another trade here and there, or in that example, because it's close, I may try to wait to see if it's going to hit that level and come off to there. So things will kind of change up in the moment, of course, because you'll have that live action going on. So let's see here. There we go. So I mean, the price will be moving, of course. You'll be anticipating a little bit more, you'll be active a little bit more, and you'll also have your psychology to contend with a little bit more. So that's another thing to keep in mind as you're working with your testing and observation. Just try to leave a little bit of extra room for error. So I know one thing I've advised not too long ago is, for example, if you have a longer losing streak of about 9 by average, you may want to plan for about 11 or 12 loss trades. If you have a more consistent strategy that you use for a while, and you may have a lower losing streak of like 6, 5 or 6 losses in a row, you may want to try to just plan for 7 or 8. You always want to try to make sure that you have some ability to open another trade, because as soon as you lose your ability to open a position and apply any amount of risk whatsoever, you are now completely out of the market and you are out of the game. So the number one thing to always remember is manage your risk. So see, we can look over the statistics. Not too reliable or restorative in that run, but if we had run more than just a total of 14 trades, we could have very well pushed that a lot further. This is one of those examples. Like I say, I know I'm typically wrong about 7 times in a row, but I had to plan a little bit more because this is one of those worst case scenarios where the streak just would not break. But it took a little bit longer as well to get that done. So, things can change, the market can change, but the main thing is we always want to try to return something out of that trade, out of what we're doing. And we want to make sure that we're always returning something positive, not returning something negative. So the main effort that's doing all the work is the math, just making sure that if you should win this trade, even though you lost 8 other trades, if you can afford the risk, you want to try to make this trade come out positive. So that's the overall results, and how you would use the calculator, the drawdown chart together to get your risk planned out from the very beginning, and then have a plan for the next 8 trades or so. If you're wrong, and know exactly where your account's going to stand. So if you're taking a challenge with some different amounts, you can adjust these numbers. Like for example, here you'll notice I'm using a little bit of a different strategy for sizing up. For this, I'm just mainly watching that drawdown, but at the same time, I'm trying to keep that gain as close to 1% as possible for the first 5 trades. So that you can set this chart up in any kind of way that you want. It's mainly, you can either set it up with risk in mind, you could set it up with gain in mind, you could set it up basically with just trying to manage it out as far as possible without drastically increasing your drawdown and your stop out equity. This could be something, if you are still kind of new to trading or something, you may want to be cautious. So this will help you basically look ahead and see where you're going to be. So if you're looking down here on the chart and it's, you've increased it, like for example here, and you're looking down the chart and you're like, oh no, I'm not okay with $4,600. I may have something coming out at the end of the month or something, and I may need to pull a couple $100. So let me try to reduce this amount. So then you can come up here and work with these numbers to try to give yourself something. So you may want to end up sizing down here and start with the point, 1, 2, and then kind of size down, and that'll keep you a little bit closer to staying in your budget should you have to pull some money out. So you can even use it to plan ahead that way. Just keep in mind though, once you start to size down, you're going to have to start either looking for a larger target. So for example, here you may have to look for 120, you may have to look for 140, and it's very possible to get that, as I showed in this example where we were looking here, and ended up taking it from there to there. So you could very, very well get, like 124, or had we held on, we could have actually taken 186, 190 out of that if I'd have just set it at the level and left it. So, there's a lot of different ways you can work this out and work with what the market is trying to give you. In this situation now, it looks like we've got that pretty clear level. Notice how it just kind of happened to work out. We've got our little spike. It flipped, it reversed, now it's showing that. I would almost bet it's going to go and start shorting off. So let's go ahead and take that trade just for fun and finish out the video. Set that up. Yep. And I'll just do that for fun. Stop loss, arbitrary 30 points. And we'll try for that 180 there. Running on forward. Nope, didn't get that one. So this may actually go, still may actually be going down though, I think. Nope, didn't get it. But we'll see what if it did actually make it. Nope, wouldn't have got that at all. But that is in a nutshell. I'll go ahead and put this up before I make the video too much longer. But just manage your risk, keep your ability to trade, and eventually you will make a gain and continue pushing that account forward. The biggest note to keep in mind is make sure you get those trades in on practice and simulation. Trade, 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 spend a few hours each day for a couple of weeks. You want to have as much data as possible that is all similar. So that's why I kind of recommend sticking with the same pair, same time frame. Like for example, I was doing the hourly. That's my typical time frame to trade. So I may use other time frames from time to time, but the hourly is my primary. So that's kind of the one I'm testing on. And just keep in mind, there's still going to be some variations in demo versus live because of the psychology. But all in all, you just want to get some typical numbers, some typical ideas. That way, when you do go to the live market, you don't get surprised or blow the account out or rely on luck in order to make money. You just go and apply the calculator, trade as normal, and when you do hit, start over, repeat the process. Rinse, repeat, rinse, repeat, rinse, repeat. With the calculator, just make sure you're only filling in the white boxes, and everything else that is colored out should be protected, but anything that is colored out and not white, these gray areas here and so forth, those have formulas in them. They should block you from editing them, but in the download with the video, you're going to get 2 sheets. They're going to both be blank. It's just in case, and just always remember to make another copy. Always keep an extra copy, and if something does go wrong, just download another one from the video. But hopefully I've got everything protected this time to where everything stays intact. And that's going to wrap it up for this video, and I will catch you on in the next one. Put in that time, put in that practice. The effort's definitely going to be worth it.